Welcome to the Block Time podcast, produced by Riot Platforms, where we take a deep dive into topics relating to Bitcoin, Bitcoin mining, and the grid. Today, we've got an awesome guest, Fred Krueger. Fred, welcome. Fred has emerged as an expert on the Bitcoin ETFs and a commentator there, so excited to have him on. Welcome, Fred.
Thanks a lot, Pierre. Happy to be here.
So I first started seeing your tweets, it feels like this year, maybe early last year, and I quickly followed you because you had some interesting insights and I think a differentiated perspective on the ETFs from other commentators. So I'd be really curious, though, to rewind and kind of hear about your background and your career and how you ended up commenting on Bitcoin.
Yeah, so I'm kind of an unusual bird, Pierre. So I kind of have I have sort of two backgrounds. One is I've sort of been involved in finance in the early part of my career quite a bit. So I was on Wall Street. I was a trader, a prop trader at pretty much the top firm on Wall Street, which is Salomon Brothers in the late 80s, early 90s in Greenwich Capital, and actually was even moved to Paris to trade and in Greenwich Capital. So I have a lot of experience with Wall Street, and I've kept in touch with Wall Street, and I'm a frequent trader, and you know, I consume that world, right? That news, and I'm also a Bitcoiner, and you know, I started like everybody else with not so much conviction about Bitcoin per se. So I've played around with other cryptocurrencies, but really since 2020, I've just been 2019 really is when I got the conviction, and then since 2020, I've just been really full time on Bitcoin, and so I think I saw something when this ETF came out that. And I wasn't very involved in Twitter at all. I just wasn't tweeting, not interested. But then when this ETF came out, I got very, very excited. And it's not like I suddenly decided to buy more Bitcoin, but I suddenly felt like at least I could add a lot to the discussion. Because I felt that both the Bitcoiners and the finance guys didn't have an understanding of what was about to hit them. So basically, I put a video just like this in the same room, in the same position, just like this. And I sort of said, hey, I'm Fred. Listen, I'm a Wall Streeter and a Bitcoiner. And, let me tell you what I think is likely to happen when these kind of ETFs, if these ETFs and I thought they would happen, but, I couldn't be sure, right? And nobody could be sure. But I said, listen, I think this is going to be the biggest thing in my recollection to ever hit Bitcoin. And so, that was sort of my thesis, and I basically just tried to amplify that thesis over and over. And, a lot of people have listened to me, and it's fun. It's fun kind of being part of that discussion. I'm not here trying to be a pro podcaster or anything, I'm not selling trading courses. I'm not, I don't have any sponsors, I'm just a guy, right? I'm just a guy with a bunch of Bitcoin, and I want to see Bitcoin win, right? That's my mission here. But I really think it's important to educate other Bitcoiners, but also other Wall Street, other investors, I would say, really, right? About, what this ETF means, what's likely to mean for the price of Bitcoin going forward. And so that's been sort of my unique voice. Now, other people also have jumped on it, and I support all that. If the more the merrier. But I really wanted to kind of bring that part of the thing to the discussion, and I still feel that a lot of Bitcoiners are pretty hostile to some of these ETFs. So
yeah,
as you probably know.
That's right. I mean, Um, I often get labeled as a maxi purist, and so but it's true that I do look at the ETFs as kind of less than self custody, right? But I think I've moderated my view by reading your insights, and so I think you've contributed a lot of value in that regard. So I'm curious, you mentioned the Wall Street guys are missing something, and the Bitcoiners are missing something. Do you want to walk us
Yeah.
through on both kind of what?
Okay, so let's start with the Wall Street guys. What are they missing, right? Well, what they're missing is they're looking at this as, okay, we have literally thousands of ETFs, right? There's 3,000 ETFs out there, right? There literally is one new ETF launching every day.
Could we pause and
Okay.
explain what an ETF is for the folks out
Sure.
there? Yeah.
Okay, so an ETF is an exchange traded fund, right? And it's different from a mutual fund or an index fund, right? It's a fund where you basically are given a percentage of the fund. If you own the ETF, it's essentially you own the spot ETFs. There's different kinds of ETFs as well. But if you own a spot ETF, you own basically a share of the Bitcoin that the ETF holds, right? So it really is a one-to-one correspondence, more or less. And we can get into a little bit like where the slippage may be on a day-to-day basis. But essentially, for all intents and purposes, you own the underlying, right? Now, you can sell that, and you own this underlying in an extremely tax-efficient wrapper, right? That's very important. So if you hold this ETF, if you buy say the IBIT ETF, right, and you buy this ETF and you buy it today and you hold it for a year, it's just it's a long-term capital gains transaction, and it's extremely tax efficient, right? If you owned a mutual fund that owns Bitcoin, that mutual fund could generate tax to you even if you didn't actually get the benefit of that tax, right? So mutual funds are not tax efficient. They also have very high fees typically. And these ETFs have very, very low fees. So it's a very low fee, very tax efficient way to own an asset. And they have... these ETFs have really been taking over the financial world, and it's not just a 1 year, 2 year, 5 year thing. They've been taking over the world over the last 20 years. Okay, so just as an order of magnitude, right? There's $10 trillion worth of ETFs in the world today. 7 trillion of them in the U.S. Right, the first ETF was an American ETF for soybeans, and there's about $10 trillion of these ETFs. Now, the interesting thing is, if you go back 20 years, there was only $300 billion worth of these ETFs. So this thing has gone up 30x over the last 20 years. So one of the things I like to say is, a lot of people say Bitcoin's eating the world, and I also say ETFs are eating the world, right? And Larry Fink from BlackRock has also said, ETFs are eating the world. And, to some extent, I think Bitcoin is just there for the ride, right? So this is the perfect sort of vehicle to own something like Bitcoin in. It's a very standardized vehicle, right? So you have ETFs for everything at this point. You have ETFs for the S&P 500. You have ETFs for, mid-cap stocks. You have ETFs for mid-cap Indian stocks, right? So you have ETFs that'll go up. You have ETFs that'll go down. So you have ETF for there's an ETF that all it does is own Tesla, and you can say, why don't I just buy Tesla? Because it's an ETF. It's a little bit, it's more standardized. So this standardized package is sort of taking over. This is the package that sort of won the financial kind of, the financial product wars. Now, the because there's so many of them, and when the pure Wall Street people were handicapping Bitcoin, they were like, well, okay, this is some cool new asset, great. It may do $10 billion, right, in sort of total flows in year one. And that was sort of viewed as, that would be a successful ETF, right? Now, I immediately said, wait. This is something completely different than another like Indian mid-cap ETF, or platinum ETF or a gold ETF. It's like, this is something completely different, right? This is the best asset class in 13 of the last 15 years, right? And this is an asset that most investors, for a lot of reasons, just couldn't participate in, right? They didn't want to do the self-custody. They can't do it. The advisors can't recommend this product. The advisors can't recommend that you hold this thing in Coinbase. The advisors don't want to recommend something like the Grayscale Bitcoin Trust. So there's a lot of reasons why these people haven't owned it. So there's a pent-up demand for this asset. They've never had this asset, and it's arguably one of the most exciting assets, if not the most exciting asset class, right now, right, that you can sort of invest in. So I immediately said, wait a second, these Wall Streeters do not know what they've got. Now I think Larry Fink knows what I think he has a pretty good idea what he's brought to the world, right? Larry Fink being the CEO of BlackRock. And but I don't think the average investor has really any idea. The average sort of ETF kind of watcher has no idea, and so to a large extent, this has not even played out yet. I mean, most investors still don't even know about this ETF. The advisors, they haven't even formed an opinion on it yet, right? So I think Wall Street's it's a completely new animal for them. They haven't been following kind of our journey. We've been following this asset for a long time, right? But not these guys. They're unaware of the asset, right? So that's Wall Street. Now the Bitcoiners, I appreciate, and I'm not going to knock self-custody, right? I appreciate self-custody. I'm an avid multi-sig, Casa Diamond user. I've gone through every single iteration of self-custody known to man, right? I built Bitcoin wallets. I understand the tech. I understand the math of the Bitcoin white paper and all the rest. But I can tell you that the Bitcoiners a lot of them don't appreciate the difficulty that most people have in doing what they were able to do, right? You figured out how to custody your keys. You figured out your Trezor, your ledger. You figured out custody, right? This is not something that the average boomer investor is ever going to figure out. It's just not going to happen. And I'm still hopeful, right? I'm still hopeful that we're gonna see good self-custody solutions and fast L2 solutions. I have tremendous hope for this, right? But I think right now, over the next couple years, what I think is going to get the most traction is going to be these ETFs. So that's kind of where I really think that people should realize that this is a gift from God, or a gift from Gary Gensler specifically, right?
Well, let's talk about that part, which is kind of the history of the ETF for Bitcoin, which started more than a decade ago with the Winklevi twins filing for the first Bitcoin ETF, and it just getting repeatedly denied, not just by Gary Gensler, but by his predecessor as well.
Oh, yeah. So, I mean, look, this is obviously a lot of people have tried to do these ETFs, and there's not just the Winklevi, right? There's been I think there's been like 10 of these things that were just denied. I may even be undercounting. But they were just application, rejection, application, wait, rejection, application, rejection. Now, what finally kind of tipped the scales was the GBTC court decision, right? So the GBTC basically sued the SEC and said, "Listen, guys, you can't deny us this ETF because you've already accepted the fact that we have a closed-end fund, and you can't. It doesn't make sense. You're not protecting the average investor by not allowing them to have an ETF." And the judge said, "You're right. You're right. We side with you, GBTC." And I think after that was shortly after that, not that long after that, BlackRock came out and said, "We're filing for an ETF," right? So you have two things that happened. One is you had this court decision, and the second thing you had is the largest asset manager in the world who said, "You know what? I got this. I'm taking it from here," right? And I think the minute they saw BlackRock say, "We're going to lead the charge on this," then a lot of other people said, well, wait a second. If BlackRock's coming in, yeah, I'm in. I'm Fidelity, I'm in. I'm Franklin Templeton, I'm in. I'm Bitwise, I'm in. I'm ARK, I'm in. So a lot of people saw that as a symbol that this is probably going to happen now, right? And it did. So I think I definitely think it was a narrow victory. I don't think I don't think it was a given that it would even happen. But I think it's a tremendously good thing for Bitcoin.
Yeah, and before it, the GBTC product, I mean, it had quite a life, which was life of premium and then slowly decaying, kind of the 50% discount, I think, was the bottom.
Yeah, I think it never quite hit 50. I bought it actually at down 45%.
Yeah,
So
that's a
it was
quite
actually my
arbitrage.
best. Well, it was my best trade. I think I paid, if I remember correctly, just by memory, right? I think I was paid $8 for that in January of 2023. I paid $8, or maybe it was even 7. I can't remember. But it's gone up four. It went up 4 times earlier. Now it's probably up 6 times. So yeah, I mean so I captured the 3x move from Bitcoin from the absolute low of January, right? 16,000, right? But I also captured the 2x move of the discount going to 0. So it's been a fantastic trade. That was a great trade. It wasn't the majority of my Bitcoin, but it was a great trade. Now, before that, as you mentioned, there was just for the readers or the listeners, this was the only way really to play Bitcoin if you wanted to buy it in your brokerage account, say 3-4 years ago, right? There was no other way to do it, and you had to pay up, and you were paying a premium of, sometimes as much as 20%. I know people have paid 20% for it, and those premiums were the highest at the time when Bitcoin was pretty high too, right?
Yeah.
So, there are quite a few people who are still not in their money on GBTC, right? Because if you bought GBTC when, I think if you bought GBTC back in early 2021, or early 2020, or 21, you were paying $40,000 for Bitcoin. But then with the premium, you're sort of at 60,000. So you're still not in the money, right? So you're still not in the money. Yeah. So there's a lot of people like that, unfortunately. So it wasn't a good. I don't think it left a good taste in a lot of people's mouths, And then for it to trade at such a discount did not leave a great taste in people's mouths, unfortunately.
Yeah, and it got pretty big. I mean, GBTC had a substantial size to it.
Yeah, I mean at the peak GBTC, right? Okay, right at the in January, GBTC had 619,000 Bitcoin in it. Right, that was its peak. Being a closed-end fund, it couldn't liquidate at all. Right, you couldn't take money out. It was a Hotel California. You know, you check in, you don't check out. The Roach Motel. Right, you could sell the GBTC, but there was nothing driving that arbitrage to zero before this ETFization of the GBTC. So, you know, so I think there was a lot of pent up selling that people wanted to sell. You know, and some people had gotten locked in that trade for a year and a half, and they're finally getting back to break even, and they're like, "Just get me out," and I think it things made matters worse when they said part of the reason they even said we need this ETF, and one of the reasons we need this ETF was so we're going to pass on these savings to our customers. Now they were charging 2%, and they said we're going to give, and they reduced it just to 1.5%. So I think a lot of people were like, "Oh my God, okay, so you won the ETF and you're not passing any of the savings back to us." Now, the next highest priced ETF is like 40 basis points, right? So they're already 3.5 times as much as the next one.
And what do you think is their thinking on the GBTC side to keep the fee so high?
I mean, I think they're viewing this thing as it's sort of like you've got a mature cow, and you're going to milk the cow for as long as possible, and then you're going to eventually cut rates. But you don't have to cut rates now. Might as well milk the cow for another 5 years.
Because people are lazy, or there's tax implications from converting to a different ETF?
I'd say it's mainly tax implications, right? But there are quite a few people who are in it at a profit, and they're not going to sell, like me. I own a bunch of GBTC. I'm not selling because I don't want to take those capital gains.
Might be another argument to have the IRS kind of recognize like-kind exchange between.
Yeah, no, I was really hoping for that, right? Because then I could I think that was the entire goal, right? Like, that's one of the reasons that BlackRock was pushing so heavily for it, right? Because they realized that if they got the like-kind exchange, then basically all that BTC would just leave GBTC. I mean, it would just overnight go to BlackRock, right? But I do believe the GBTC itself was like pushing for in-kind, which I don't quite understand, but I do think they were.
That's interesting. And so when we look at kind of the dynamics of who has come out ahead, obviously it seems like BlackRock is number one at this point. Is it because of the reputation of the firm, their size? Like, how do you think winners and losers get picked in the ETF race?
Well, you have to sort of look at sort of the financial landscape, okay? So who's the biggest player in the financial landscape? It's actually not even BlackRock. It's Vanguard, right? So 30%, 1/3 of every dollar investing goes to Vanguard. Now, Vanguard does not like Bitcoin. Vanguard does not like gold, for that matter. They're sort of like, we'll allow GLD, but we don't like it. And for a long time, they didn't like ETFs either, right? So Vanguard has this very kind of purist view of how people should invest. And they think that everybody should invest in basically American stocks, like literally. Now they have some international stuff, but it was sort of an afterthought, right? They're sort of like, you should invest in America, and buy index funds. That was their idea. And, from 2020 from 2000 to 2020, that was absolutely the right trade. And as a result, indexing is just, taken off. And, 30% of all these dollars goes to Vanguard. Now, the next biggest player is BlackRock. And BlackRock has specialized in this ETF. But BlackRock has basically led the sort of financialization and the making all these kind of cookie cutter iShares products. Whatever you want, they've got it's sort of like an app. There's an app for this, there's an ETF for this, and it's a BlackRock ETF, right? So they're kind of the Apple of ETFs, and they're ultra competitive. They're a little bit like Amazon. Like we're going to have the lowest rates. We're going to have free shipping. That's sort of BlackRock, right? They're the Amazon of ETFs, and nobody can compete with them except for Vanguard, right? So really, they're the leader outside of Vanguard, and then you have Fidelity, which is a much older, I would say, more archaic firm, right? Which was known in the 80s for like the Fidelity Magellan Fund. But these Fidelity's kind of big but on the way down. BlackRock is big but still going way up, right? And really BlackRock doesn't have any competition, other than Vanguard. That's its only real competition. So BlackRock's going to win this race. I mean, it was obvious to me that BlackRock was going to win this race, but it's sort of like saying, who's going to be number 2 in e-commerce? I don't know. It doesn't even matter, right? eBay maybe. I don't. Yeah, I don't even know. Who's going to be the number 2 search engine? DuckDuckGo. I don't know. But like, BlackRock owns kind of this category of these ETFs. And some of these firms are pretty big. Franklin Templeton's a big firm, but they're primarily like bonds, municipal bonds. They've got a bunch of ETFs, but they're it's very old school, right? And they aren't doing particularly great on these new ETFs. Now, on the other hand, Bitwise has kind of emerged as a kind of crypto native solution, and ARK, right? And both very crypto native, really understand this stuff very well, and appealing to kind of a younger generation, and both of them offering very aggressive fees, right? So they're both doing pretty damn well, right? For kind of smaller players, right? But this is not going to be a winner take all. It's going to be a winner take most. But I think just between BlackRock and all the others, I mean, the flows have been just extraordinary.
At first, we saw some outflows from GPTC, and people were like, "Oh, this is sell the news," but then it seems like the wind caught the sails.
Yeah. So the way I look at it is, everybody right before this thing started coming out, right? There was a lot of people were saying, "Okay, what do we think these flows are going to be?" And then people put out these numbers like 10 billion and 15 billion. Standard Charter put out 50 billion. Now, then we saw this sort of unexpected GBTC selling, right? Now, some people said they'd expected some, but nobody expected the amount that kind of we had, right? And now we have sort of a reporting issue, right? Because now we have really some part of this which is totally unrelated to ETFs, right? It's just, there's a window. Sam Bankman-Fried, the FTX estate, is now selling. But they could have been selling Bitcoin if they happened to have Bitcoin in the bankruptcy, right? They just happen to have GBTC, right? So it really has nothing to do with the demand for these ETFs. And so, there has been a little bit of movement from GBTC to some of these newer ETFs. But overall, there's been net well over $10 billion of new demand, fresh virgin money that's come into this market, right, over the last 5 weeks. And, we're running our run rate right now for Wall Street is on the order of 100,000 Bitcoin per month. That is how much the run rate is for funds. And you can pull this up if you go to ByteTree and you they have a great sort of Bitcoin flows thing on ByteTree, which not only includes the U.S. ETFs, but includes all foreign ETFs as well, and other ETP products, including future stuff. There's been 100,000 Bitcoin a month run rate would be the highest run rate ever into Bitcoin, right? So, just as an example, the last time we got to even 80,000 Bitcoin a month was in September of 2020. Now, the thing about that is Bitcoin was at 15,000 back then.
Yeah.
Right? So in dollar terms, right? In Bitcoin terms, it's the same number. In dollar terms, it's 3 times as much.
Wow.
So we're having just, I mean, the amount of cash that's coming into this stuff is much bigger than we've ever seen, ever.
And
so
who would you say where is that cash coming from?
So, okay, where is it coming from today and where is it coming from down the road? Those are sort of 2 separate questions, right? So I would say the long-term channel for this stuff is wealth advisors, right? So, and then I'll just back up a little bit, talk about how kind of the markets changed, right? So when I was on Wall Street, there was a lot of active managers. There was a lot of mutual funds, right? Still things like this Fidelity, Magellan, Peter Lynch, all these kind of people like that, and hedge funds, right? Very active managing. This stuff has moved very much to passive management. So you have a lot of these kind of, ETFs, and it's almost just like a menu of ETFs. It's sort of like you go to McDonald's, they'll take a little bit of that, a little bit of that, a little bit of that, right? And you have this new class of advisors, right? And these advisors are paid a very small commission, but their commission, they're not paid on a per trading basis, right? They're just paid 20 basis points or 10 basis points on the assets that they manage. That's how they make money. So the way that they position themselves is, listen, we just take our 10 basis points. We're cheap. It doesn't matter. You're going to make, you're going to make 10%. We take 10 basis points. That's 1% of your money that you're going to make, or 2%. And it's not a lot, and we're totally aligned with you, right? We have no incentive for you to put you in products where we make money and you don't, right? So the rise of these advisors look for ultra cheap stuff, right? That's what they do, right? So these advisors now control, upwards of $100 trillion. Okay, so we're in this new world of passive management, but which passive buckets gets chosen is now chosen by these advisors, right? And so now these advisors have this new thing that they can put in their clients' portfolios, right, which is Bitcoin, right? Some of it they're just going to put into their client portfolio. Some of it they're going to recommend, right, to their clients' portfolios. But it's going to take them a little bit of time. It's not like the ETF comes out and they're just like, okay, bam, you guys own 2% of Bitcoin. No. These guys are going to, they got to get their materials ready. They got to understand. They got to get comfortable with like the redemption process and all the rest, and it's going to take a little bit of time, right? But so that's the long-term thing. In the short term, anybody with a Fidelity account right now can easily go and buy these ETFs, right? You don't need to go through an advisor. So you have the sort of retail platform, the retail availability is there right now today, right? But some people would have said, well, retail had the option to go to GBTC before, right?
Or even like
but I would
Robinhood
still argue,
or Coinbase.
yeah, right. Robinhood. So Robinhood and Coinbase definitely for the younger generation, right? They've already had that, right? So anybody who's under 35, yeah, sure, I get it, right? But anybody who's over 50 is not using Robinhood. Okay, it's just it's a truncated thing, and I got to tell you, like my vintage of kind of investors, I've tried to get people onto Coinbase, and people are like, "What is that thing?" And I'm like, "It's a very legitimate thing," and they're like, some crypto startup. I'm like, no, it's a public company. It's not a startup. And they're like, well, I heard bad stuff about these crypto companies. So for them to send money to Coinbase is a real stretch, And I know it. I'm making my generation sound pretty stupid.
No,
but
it's not stupidity, right?
But it's the fact.
Yeah.
They're not comfortable with it, right? And the reality is, as you get older and you have some assets, you really get very stuck in your ways, right? And the last thing you want to do is hold up your passport to a webcam and and do a biometric KYC. Because you don't even remember. You did something like that 20 years ago. But, when you opened your Schwab account, or 30 years ago, or 40 years ago.
And maybe that was in
but you
an
don't
office,
remember it.
right? A physical brick and mortar location where you were with someone from the company.
In many cases, yes. Or you might have, I've opened I have an account at Goldman Sachs, for example, right? How did I have an account at Goldman Sachs? I sold a company back in 2000, and Goldman Sachs knocked on my door, and as they do, right? They're there to come to you, and they say, "Hey, Mr. Krueger, great, welcome to Goldman Sachs. Let us handle some of your," you know what I mean? So, let us set this account up for you. Just write down your details. We'll take care of the rest, right? So that kind of white glove treatment is so different from enter your social security number, hit enter, do KYC, so, it's a relation, it's they call it relationship banking, but it is very true, right? It is all about relationships, and it's usually you're recommended by a friend to have some broker handle you. They call on you. They personally take you out to lunch or dinner. They buy you seats at the baseball game or the basketball. That's the old way of doing business, right? And those habits are hard to break. So, so this is part of the problem before. And I think I'm not the only person to make this point, but I think VJ Boyapati made this point earlier in a podcast I listened to the other day. But he said, look, these guys are not going to be allocating 20 or 30% of their net worth to Bitcoin, right? They're going to be allocating us like 1 or 2%, right? So for them to go through all that effort to allocate 1 or 2% just doesn't seem worth it, Now, if you're sitting there with your Fidelity account and you're like, ooh, new product, FBTC. Okay, let's take a little bit of that. Click, 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 click. Okay, now I own $100,000 worth of FBTC. 1 minute. 1 minute, you're done. So, I just think that's the thing that the Bitcoiners have missed, right? They've missed how hard it is going to be to convert those rich people. I think they've done better job a little bit with sort of millennials and, just in general, right? In general, onboarding millennials has been easier, right? I think for all these products. But onboarding the 45 plus older wealthy generation has proved to be incredibly difficult. And that, I think, is unfortunately, that's the generation that actually has 90% of the money right now, right? So, I've been to El Salvador twice. I'm in favor of all these things, right? Lightning, self-custody, mobile wallets, everything, right? But I got to tell you, El Salvador, they're not going to be buying $500 million of Bitcoin a day. They own probably $300 million total. The country owns $300 million of Bitcoin total. You know, Bitcoin and Fidelity bought that yesterday. So, you know, as much as we like to do this, I think there's a, you know, there is a there's a room to kind of say, okay, guys, let's take the philosophy and all the goodwill and everything you want to do, and let's just talk numbers here, right? Like how many Lightning wallets are you getting? Okay, you love Lightning. I know you like Lightning, but like how many Lightning wallets? How many reviews are there? What are the top Lightning wallets available in the U.S. today? Okay, Wallet of Satoshi, no longer available in the United States, right? Phoenix. Okay, I checked it on yesterday. 40 reviews. 40 reviews on iOS. Okay, this is 40 reviews. You know, like we're not talking Instagram here. You know, where you know reviews 25 million. Right. You know, so these things they're nice experiments, I would say, but they're not really moving the needle at this point. And I think, you know, we can continue to experiment, and, you know, there will be some. I'm pretty confident that as Bitcoin becomes more valuable and there's more of a Bitcoin story out there, and as better solutions from a user interface perspective get adopted, and just as time passes, I'm confident that we will get to more general adoption. But I think right now, actually, adoption is going to happen with rich people. It's going to happen with the 150 million Americans who own stock. That's your target market right now. Yeah.
And so when if Bitcoin evolves from store of value to also being a medium of exchange, do you see a future where you would be able to send a Lightning payment from your brokerage account that, you know, is doing in-kind conversion from the ETF? Kind of like you do with a money market fund, you can have a checking account, right? You can have a debit card linked to your account. Do you think that's part of the future?
Well, look, I mean, I think who does it the best right now, right? And I would say Cash App does it the best. In my opinion, I think overall the user experience of Cash App is pretty hard to beat, you know. But it's only in America, right? And even I'd be interested to see what percentage of Cash App users even have gone into the Bitcoin tab. You know what I mean? Like it's not even it used to be more. They used to have a big B on the bottom of it, and it used to be more prevalent. Now you have to kind of go poke around to find it, right? But they've got a great user interface, and they've got a great Lightning implementation, and that's about as good as it gets. Are we going to see easy in-kind movement from something like these ETFs to Cash App? Not right now. Maybe in a couple years we're going to see some in-kind movement. Probably, you know. Is it going to be supporting Lightning? I don't know. I mean, that's a big question. You know, I think, you know, it's probably. I would say it's going to be even longer, right? I mean, you know, Binance supported Lightning when? Last year, you know, like 6 months ago. So, you know, I think this stuff's going to take a while. I am very bullish on. I think I'm very bullish on, you know, at some point these layer twos, and I don't mean just Lightning. I do think that layer twos on Bitcoin are gonna work, right? And I don't exactly know what that looks like yet, right? But I've seen enough recently that I'm pretty excited about that I do sort of see a world where, you know, you're not going to be, we're not going to have some of the limitations of Lightning with channel, just the complexity of Lightning, the user interface problems with Lightning, and some of the, you know, just inability to, you know, just to find channels to move the liquidity through. I think some of that stuff's going to get solved with other means. I think it's all very theoretical right now, and we don't know how that's actually going to play out. But I'm somewhat optimistic over the next 4 to 5 years that I think it'll get solved. So I do believe that Bitcoin will be the store of value, and not just a store of value, but it will be used as a medium of payment. I believe Bitcoin is fundamentally going to become the next money, right? And I think if you study Bitcoin enough, that's why you want to be in Bitcoin, right? Because you realize that we've invented the money, and I think there's sort of 2 phases to that. The first phase is it becomes the means of exchange in the digital world, right? So, and that digital world is becoming bigger and bigger and bigger, right? So that digital world could mean an NFT type thing, right? But it could also mean just paying for somebody's service, right? Like a contractor. That's effectively a digital good at this point, right? And or it could mean watching a movie. It could mean a lot of things, right? So I think the digital world share versus the pure physical world is increasing. And I do think that the first thing Bitcoin has to do is win the digital world, right? If Bitcoin can be the de facto currency for the digital world, then that's huge already, right? That's enormous. And then and I think that may take, let's just say it takes a decade for that to happen, right? And I think, it may be Lightning, but it may also be something else, right? It may be, it may be running on wrapped Bitcoin on Solana, right? But in a sort of very trustless way, right? With ZK rollups and everything else, right? It may be, who knows? It might be on ETH. I don't think so, but but some form of fast Bitcoin, very trustless, fast, very scalable. I think we have to get there. If we're going to have 1 billion people use Bitcoin, we're going to have to do something like that, right? Because Bitcoin just on layer 1 is not going to work at this current block size for more than 200 million people. And just the math does, you've got 200 million transactions right now that Bitcoin can handle in a year. That's your maximum pretty much. Now you might be able to get a little bit more if you start batching transactions and doing this and that. But, there's a fundamental limit of, the Bitcoin that we know right now, how many users it can have on kind of mainnet. And, even on Lightning, you have the on-ramps, off-ramps, and so on. So I think we're going to have to get something else to scale it, but I think it's going to happen. And I think that regardless of how it happens, I think Bitcoin will be the unit of account of that world, right? So I feel like we need a unit of account, right? We don't want to have 10 currencies. We want one currency, We want to denominate our things in something. And I don't think it's going to be in US dollars. That's my bet, right? I think we're going to go to a Bitcoin denominated standard. Now, is that delivered through custodial things like Coinbase? Is it delivered through wrap things? Is it delivered through Lightning? I don't know, but I do feel like that stuff's going to happen. And then once that happens, it's not that far of a stretch for it to happen for atoms as well, right?
Right.
Once you get the bits going, then the atoms can follow.
And on the payment side, there's this tension between custodial solutions, non-custodial solutions, which kind of mirrors the conversation on the store of value side of custodial versus self-custody. So one of the risks that Bitcoiners always point to is, hey, look, the government is going to seize the Bitcoin from these ETFs. Do you think, what probability would you assign to that? Or do you think it's just kind of a silly...
I think, look, I would say that probability went down since these ETFs came, right? I think the fact is, this is, somebody said on my blog, on my Twitter, they were like, this is kind of not when they're fighting you, but they're joining you, right? So guess what? Now you have BlackRock as effectively a Bitcoiner, right? So I think the chance is less of that, and I think there's for a lot of different reasons. One is I think these big players are now economically incentivized to make this stuff work, right? Even the banks right now are sort of saying, wait, we don't want your crypto regulations to apply to these ETFs, right? Because we want to provide services to these ETFs. So, we're anti everything except for we want to make some money on these ETFs, right? So that's one thing. And then the second thing is, I think we're going to see in a matter of a couple of years, we're going to see a significant percentage of Americans who actually own Bitcoin, right?
No.
And I think that's going to make an actual difference when it gets to a law that might ban Bitcoin. And people have estimated this number of Bitcoiners or crypto people, and I agree with Tom Lee. I think it's a lot smaller than some of these estimates have been. If I had to guess, I would say there's probably a couple million Bitcoiners worldwide.
Yeah, that sounds right.
I would say we're not in the tens or hundreds of millions of Bitcoiners. We're not there, right? We're maybe in the single digit millions of Bitcoiners, right? And in the U.S., there might be a million, of us. So, a million people in a country that our size, we're loud, but we're not a blocking vote, right? But if 10% of these stock accounts start owning one of these ETFs because it's starting to do really well, I would say 10% of Americans own Apple. You know what I mean? 10% of Americans own Google now. So, and they own them either independently or they own them through S&P 500, right? Because these things are in the S&P 500. So I think that that's likely to be a really great thing for Bitcoin advocacy in general, is to get people so they care, Because if you have $2 in a non-custodial wallet because you filled out some quiz on Coinbase, that does not make you a Bitcoiner. You know what I mean? So you have to have some actual value in it.
Skin in the game.
You have to have some skin in the game. It's sort of like, and then you do care. It's like you start really caring. Andreas Antonopoulos had this great video. I don't know if you've seen this one. It's called "Blockchain for Bananas," and he says, look, guys, you can do all these different things, and you probably don't care at all about your security or anything. But once you start buying a couple $1,000, you get really interested in security really quick, And, it's amazing how that happens, right? And I think that if you start having $10,000 in Bitcoin, you start really caring what some politician's going to say about Bitcoin, right? So I think this is net going to be very good for controlling people possibly doing what you're suggesting, but also just encroaching on some of this new stuff that we're seeing with the miners, right? Like you gotta just do some inventory here. We like to see exactly everything you guys are doing, and not that we're going to do anything, but we just want to, just keep tabs on you a little bit, or like you have a self-hosted wallet. We kind of like to know the address of that. And can you click this box saying that you in fact own it? So, those kind of I would call them, they're pretty egregious kind of overreaches by the government. They could kind of get away with that last year, but now we're already getting a little loud that they're realizing that you may not be able to get away with that easily, Yeah. And I think, another couple years of ETFs, and I think you will not be able to get away with that. So my hope is this broadens adoption out, and it's not going to teach, are these people going to go and get non-custodial wallets if they own the ETF? Most of them won't, they will not. But they'll start caring about Bitcoin. They'll start talking about Bitcoin. They'll start telling their kids about Bitcoin. You know, like, hey, Dad bought some Bitcoin and it's up a lot. Yeah, my dad's, you know, okay, great. And so maybe I'm going to show my dad. I'm going to one up my dad. Okay, great. I got this cold card, you know, here. You know, like, so, you know, I think the next generation is going to get much more interested in that. I think it's going to be a positive force for Bitcoin. If we get, you know, these boomers, because, you know, guys, we're loud. I mean, we love to talk, you know, and we love to talk about, you know, that we bought Nvidia or Google, or we bought this house, you know, we bought this house 20 years ago for $200,000 and it's worth $4 million right now, you know, like, yeah. So you want those stories. You want people telling those stories at the Thanksgiving Day, you know, next year, right? And so I think it's all positive. It's very positive for the Bitcoin narrative. And I do think that, look, let's acknowledge that some of the stuff that we have done, I'm saying the royal we, but like some of the stuff that we as Bitcoiners hasn't worked, right? It hasn't, you know, it's well intended, right? But it didn't have the consequences that, you know, perhaps we hoped, right? You know, Michael Saylor, great, he bought some Bitcoin, fantastic, but you know, he wasn't very effective in trying to get his other fellow CEOs to buy it that I can see. You know, Elon Musk bought some for Tesla, then he sold it. You know, so a lot of the stuff that we've done, you know, it's you know, you have to try a lot of things where something works, right? But, you know, I just see a lot of things have been tried over the last 4 to 5 to 6 to 8 years, right? A lot of things have been tried. Some of them have been, you know, complete and utter scams, right? Or whatever. Yeah. I'm not even sure, but like, you know, I'm not sure Celsius was a scam, but, you know, whatever, it didn't work, right? It didn't work, right? It sounded good. A lot of people joined it. I mean, I put some money on Celsius. I took it out on time, but, you know, you know, it's a lot of things have been tried. Not a lot of, you can't really point to a lot of things that have been super successful other than Coinbase and ETFs, in my opinion.
And do you actually see the ETF market eclipsing the spot market in terms of volumes? And what implications would that have?
Well, I think there's two things. One is we need to get derivatives on ETFs first for that to happen, right? So, I mean, I think the derivative market's always bigger than the spot market, right? And I definitely think that once we have, you know, options on IBIT, for example, right? That's going to be a huge thing. I think it's going to be. It may not eclipse the stock market, eclipse the exchange market, but I definitely think it'll be significant enough in its own right? And, you know, subject to the fact that it's not going to trade 24/7. It's going to trade, you know, it's going to trade during kind of New York hours, right? And it's going to be completely regulated. And I think overall, I think it's a very good thing. And I think we're going to see a lot less volatility day to day, I believe. But not so much because of the technical characteristics of ETF versus exchange, but just because I think that the buyers are different, right? The person who's buying a perpetual on BitMEX, you know, and who's jumping into something at 50 times leverage, right? Yeah. You know, Bitcoin moves 2%, they're wrecked, right? They're taken out, right? Now, that's an extremely volatile position, right? On the other hand, you take somebody who's, a dentist, or, a guy owns a bunch of car dealers, and he puts 2% or 3% of his net worth in Bitcoin, and he looks at it once a month. Like, you almost have a 10,000x difference in kind of leverage, right? Is it 1% of their net worth versus 100 times their net worth, right? So, I just think that, it's going to be, once you get into this, it's a very good thing to get these more steady hands, long-term money, asset allocator money. I think that'll be a fantastic thing for overall, Bitcoin. And I think we're sort of seeing that with just the price action right now, right? I think, just this buying, waves of buying, every day. Yeah, it still can go down. We had the hot inflation number, market went down. Great. But, it probably would have crashed,
More.
7,000 points, previously, right? But now there's all this buying coming in, you got these asset allocators buying. So I think that the characteristic of this thing is going to change a little bit. And I feel like, I think it's going to be there's going to be a psychological challenge for the Bitcoin community too, because, this whole idea of we're Bitcoiners and we do this and we're different and we're kind of these, like, well, okay, you were different, right? But, now we've kind of entered into this more mature, we're not in college anymore, we're into kind of the adult world, and, and we have these people who may not care or may never read the white paper ever, and that's kind of okay, and so I think some of us are going to have to come to a little bit to grips with kind of our own identities as Bitcoiners, because I know that it's a little hard to accept that, okay, it's sort of like selling your company, somebody else is in charge now, right?
Yeah, and it's also like cars, right? Like most people drive cars, but they're not car guys, they're not into wrenching on their car.
Oh yeah, exactly. And I think even like if you look at cars, right? Cars were much more important 10 years ago, 20 years ago. Now nobody cares that much anymore, right? It's the symbol of the car doesn't matter.
Producer Gabe just gave me a look. He's a car guy.
Oh yeah, okay. Well,
that one hurt a lot.
Look, I used to love cars, but look, I honestly don't care right now. It's like if I'm in a Tesla or a Prius, to me, it's just like Uber has kind of commoditized that experience, right? And now it's a ride, and I feel like this whole thing about we're Bitcoin, we got to do things our way, and we're going to stop war, or we're going to change, we're going to change the way money printing works, or this, like, maybe, but it's sort of like it's kind of out of your hands now. You know what I mean? This is not like this little project. It's going mainstream. That's kind of what you wanted, right? That's, we've all been saying we want this thing to go mainstream. We want people, and then finally it does go mainstream, and everybody's like, whoa, these guys don't even know about this. Like, they don't even know about self-custody. They haven't read the white paper. Come on, guys. They don't have any right to own any Bitcoin. What are they going to do? They're going to sell our Bitcoin. They're going to take our Bitcoin. They're going to sell it. No. It's like they have exactly the same right to have Bitcoin that you do, right? And they, the fact that you were early and you understand self-custody or the Bitcoin standard or whatever your claim to your identity in Bitcoin is, the reality is it's probably going to play out a little differently than you probably imagined, right? And, probably El Salvador is not going to take over the world. It's probably going to be rich Americans, to be honest, who end up with most of the Bitcoin. That's kind of my gut feel. So, I think this is not a bad thing, for rich Americans, rich people. Right? Like, rich people are going to figure this stuff out. That's what I think.
And if they don't, maybe they won't be rich for long.
Yeah, other people, other rich people will take that. So, look, I think it's all super positive for Bitcoin, and that's really what attracted me to this ETF thing, and it's kind of what makes me want to get on podcasts like this or something. It's just like I think it's really positive. I think everybody should be pretty jazzed about it, and it's not completely risk free. I'm not going to say it's completely risk free, but it's a great trade off, right? I mean, the difficulties of getting people on these new platforms and so on is so big. This is going to make things so much easier, and we really need Bitcoin to become this mainstream financial asset, and just if it's just another asset, that's great. That's fantastic. That we kind of want it to be a little bit more mundane, in my view, and a little less special.
Well,
So I'm pretty, yeah.
I don't know if being the same size as like the S&P 500 ETF is mundane. From one perspective, it is mundane, but from another, it's like, wow, this is a huge macro asset.
Right. Well, yeah. I mean, it's not the size of the S&P 500 anything, ETF or index or anything else yet. And look, but it has an amazing way to go, right? And I think, again, if you look at it relative to other ETFs, you can be a little misled because it's already pretty good. I mean, these are already in the top, I think the top 7% of all ETFs. I bet is in the top 7% already by market cap. But I think it could go much higher, right? I do think that overall Bitcoin could potentially rival the S&P 500 in terms of market cap. It's possible, right? But now there's a clear path to get there, right? Where when I was talking to people in 2017 and stuff, like it was just all fluff, We had no idea how we were going to get there. It was sort of, oh yeah, everybody's going to use these self-custodied wallets. No, it's just, it wasn't going to play out the way we thought it was going to play out, right? Now,
I've got one last question.
I'm not, sorry?
I've got one more question before we wrap
Sure.
up at the top of the hour here, which
Sure.
is kind of a fun one. Do you think the halving is priced in?
I don't think the halving's important.
Yeah.
That's my view.
It's a hot take.
So my view is relative to what we're seeing here. The halving is very clear what it is, right? It's 450 Bitcoin per day, right? That's the impact of the halving. 450 Bitcoin per day. That's 15,000 Bitcoin a month, right? 15,000 Bitcoin. Now, we're going to do 100,000 Bitcoin this month on these ETF on this stuff, and I don't think it's over. So the halving priced in. I don't think the ETFs are priced in. To be honest, that's how I would answer that question.
So does that violate?
We should be at 100,000 right now with the ETFs. Yeah. Forget the halving. The halving doesn't matter even. I don't think the halving is a big deal at all compared to these ETFs.
How do you think about the efficient markets hypothesis as someone who's been in the markets for a long time?
I don't think it's not like there are people who can take advantage of this stuff. This is it's not like, oh, I think Bitcoin's going to be going up, so I'll buy Bitcoin. No, like the people who could, nobody can buy Bitcoin. There's no possibility for arbitrage right now, right? These people did not have access to this, and I think everybody's still way underestimating this entire process. So I think the markets are right now very inefficient. So I think the efficient market hypothesis currently right now is not true for Bitcoin. So, I would say we're probably going to be in an exceptionally great period I mean, I really feel like the next 4 years in particular are going to be amazing on a risk return basis. Probably the best we've ever had, in my opinion, because we suddenly have this clear new buyer, this clear enabling technology, which is the ETF wrapper, massive amounts of dollars coming in, and all the other conditions that were good for Bitcoin, which is government deficits, money printer go burr, financial irresponsibility, wars, everything else. So we have the perfect background for Bitcoin, probably with some form of interest rate cuts at some point this year. So we got the perfect backdrop, but then we have this major catalyst, which is this ETF wrapper. So I think this is an amazing opportunity for Bitcoin to really go 10x from here. I definitely think that's possible, and I think it's gonna kind of break. It's gonna break the pattern of halvenings and everything else. And I think I have no idea what it looks like after 4 years, but I feel like 4 years from now it'll be a mainstream asset. It'll be much more mainstream than it is now, and probably the halvening it might make a little difference, but it's not going to be this monumental thing where it drops 75% the year before the halvening. I don't see that anymore. So, I'm not saying that it can't drop or anything, right? Because having lived through the internet, right? Yeah. The internet kept on growing from '99 to now, right? Straight line growth of adoption and everything else, right? But the Nasdaq crashed in 2000 and didn't recover, didn't hit back to the 2000 level for 2010. So, the underlying technology can progress. So my general thesis for what's going to happen is we're going to have a fantastic 4 or 5 years right now, maybe 6. Maybe doesn't even take into the account the next halving at all, just go. And then we might have, maybe it's like the S&P 500 where you have a 20-year bull market. We don't know. But it's possible we have some kind of long-term bear market. I just feel like this whole cyclicality thing might be a little old it may not play out that way anymore. But anyways, I do think it's, just to conclude, I'm very, very constructive and positive on the next 4 years, and I think everybody should be a little optimistic here. I'm not saying rush out and put all your money in Bitcoin, but I would say the optimistic story is pretty good right now. So, if I could just end with that note of optimism, that's kind of where I'd like to end it.
Well, I'm a permabull, so of course I agree with you. And I really appreciate your time today and coming on to the Block Time podcast.
Thanks, Pierre. All right. We'll catch you later.
Thanks, Fred.
Pierre.
Have a good one.
Bye.
Bye. Thank you to everyone who tuned in today. That was a great conversation with Fred. We look forward to seeing you again next week. Don't forget to subscribe to the podcast. Check out our YouTube channel as well, and share it with your friends and family, as they probably have lots of questions about Bitcoin and these new ETFs. Have a great week.